Welcome back. Continuing with corporate conversations, the management of Max Estates is now joining in on the show. Mr. Rishi Raj, who is the COO at Max Estates, is now joining in to discuss the road ahead for the company. Mr. Raj, good morning. Thank you so much for joining in. You know, your lease rental income saw good growth, but you fell short of the 130 crore guidance that you had this year. What's the road ahead for FY26? What is the kind of figure that you are penciling in?
So the lease rental at the current run rate, where almost all our assets is 100% occupied, Max Square, the latest one at 99%, the run rate is 155 to 160 crores. That is what we are looking at in this FY26.
155 to 160 crore will be the lease rental income for FY26. Commercial volumes, sir, have been on the rise. What's the outlook for FY26 and the split between commercial and residential?
So, Rima, if you look at our portfolio, we have curated a 17 million square foot of portfolio, growing from 8 to 17 in last financial year. 6 million is commercial and 11 million is residential. Of that 6 million, 2 million approximately is already delivered and leased. Our balanced commercial, almost 3.6 million square foot, is under construction, and that will come online by calendar year second half 2027. And intrinsically, I would like to tell your audience that with the acquired commercial portfolio, we have an annuity rental income potential of 700 plus crore. And this you will start seeing clocking up from FY 2029 onwards to FY 3031. So in total, today we already have 6 million square foot with 700 crores plus potential of annuity rental income.
So what is the on-ground situation when it comes to demand that you are witnessing, Mr. Raj? We are halfway through the first quarter of FY26. What's the demand scenario looking like, especially in your micro markets like Gurgaon and Noida?
Very positive. If you look at 2024, Pan-India, we did 18% more than 2023 and passed the peak of 2019. If you look at first quarter 2025, if I focus on Delhi NCR has done 3 million square foot, which is 17% higher than first quarter of 2024. Actually, commercial office leasing traction in Gurgaon as well as Noida is going extremely strong, particularly for grade A plus, developer-owned, developer-managed quality building, which we have developed and is clearly reflected in our occupancy as well as 30% plus premium on rentals that we are commanding in all of our 3 developments.
What geographies are you targeting for new acquisitions? If you need to meet your FY28 pre-sales target, so say in the next 1 or 2 years, what more needs to be done and the geographies you're looking at?
So, Rima, I'll answer that in 2 parts. If you look at our track record so far on the residential side, which I guess what you are asking me for, we started our residential journey in FY24, did a booking value of 1844 crores. FY25, we have done three times of that, 5,300 crore between Noida and our first residential launch, Estate 360 in Gurgaon. Our guidance to market for next year is 15-20% higher, 6,000 to 6,500 crores. And over FY26 to 28, our guidance is of 21,000 crore. And I would like to share with your audience that of that 21,000 over next 3 years, we already have secured 14,000 crore worth of booking value in our portfolio. So from a business development perspective, we are very sorted for next 2 financial year. Having said that, we would like to grow our 17 million square foot of portfolio with 11 million residential year on year by at least 3 million, 2 million residential, 1 million commercial. And our focus, to answer your question, is going to be Gurgaon, Noida, and Delhi. Delhi is going to be a priority from a residential perspective, given that we have a commercial footprint in Delhi, but we are looking to add residential footprint as well. We are always on the lookout for newer market, which we are keeping a close watch on within Delhi NCR. But at this moment, our focus is Gurgaon, Noida, and Delhi.
All right, Mr. Raj, thank you so much for sparing time joining us today. Wish you good luck for the rest of the year as well. The management of Max Estates on the road ahead for the company. Take a short break. On the other side, put the spotlight on PSU banks and how they performed in the March quarter. Stay tuned.